Friends, in this video, I'm just going to share you how we can identify quality stocks during a market crash time. In this video, I'm explaining two methods. First method is portfolio identification analysis of mutual funds, and second method is basic fundamental analysis. All the details I will provide it in this blog in detail. If you would like to read with the example I'm provided, you can go through the description of this video. Link is available. So in this video only outline I am providing. In mutual fund portfolio analysis method, what we have to do is we have to identify the top performing mutual funds and go to the portfolio of that mutual fund. Then you can see which are the companies these mutual fund managers are interested, because these mutual fund managers are well capable and they have with their talent, their experience, they selected these companies. So once we select these companies, this is a companies which I selected on the base of their yearly performance. If you want to select the companies, you can go to apps like money control or NSE website like that. Once we select the companies, from that we can select the portfolios. In the portfolio I listed the top 10 companies which these mutual funds are invested. Now what we can do is we can check which are the companies are common in all this portfolio. Here you can see the Infosys. Here it is there. Here it is there. In this fund also there. Here also there. That means Infosys is available in all the four funds. So that means all the fund managers are recommending Infosys. Like that we can identify which company is available in the three different funds. Then we can identify which is available in two funds. Like that we can list the funds which are available common in different mutual funds. Here you can see the charts. Once you understand these companies, now we can put here I am doing calculation February 2020, March 2020, February 2021. This is the time where before market crash happened in 2020. This March is the time where market crash happened, and February 2020 is one of the peak time again market reaches to top. So you can see here you can see the average recovery rate. When during market crash it goes to 580, and within a year it gone up to 1300. That means 124% is recovered. That means during the time of last market crash it recovered like 124%. So we can list out like this. Then we can identify which have the more returns. We can say here 124% it is here 130%. So if you are investing in like these companies, if next market crash happens also, we can see a return after a 6 months, 7 months or 1 year of time. So this is one method of identifying a quality stock. Second method is basic fundamental analysis. First basic thing what we can check is what is promoter holding, and what thing what we can say is if the promoter holding is increasing, that means promoters are confident on that company. That means we can easily invest in this company because chance of company growth also more. Then debt of a company. Debt can be for a good reason also bad reason. If the debt is high, that does not mean that company is bad, because companies take loan to invest in the business and make more business. So what you have to check is if debt repayment is going on regular basis. If that means company is making more money and repaying, in that companies we can invest. Then return on equity we can check. If the ROE is higher value, we can surely invest in that company. Sale and profit growth. If the sale is increasing means company's business is increasing. So that means we can directly invest in the companies which have higher sales. Now I'll just give you 5 golden rule of investment. First rule is invest in the business which you can understand. If you are from IT sector, you know about the different IT companies, so you can invest in like that IT companies. So if you know about the industry, it will be easy for you to identify some good companies. Invest in the company that is dominating the respective industry. If you are selecting an industry, select the top company in that industry that make your returns much faster. Next point is diversification. Don't invest every amount in a single industry. Invest among the different companies. Then if one industry goes down, another industry will help you. So what you have to do is about your 40% investment you can do in the company where you have the confidence, you knows about it. Remaining 60% you can divide among the different industries and you can invest. Golden rule number 4: buy the stock with a good track record. Everyone expect to buy a penny stock and make it a multi-bagger, but chance of becoming that multi-bagger is very less. So if you're buying a good track company with a good track record of means average return every year like that, chance of growing will be more. Rule number final rule is dividend payout companies. If a company is paying out dividend means company is making a profit regularly. From that profit they are paying dividends. So if you are investing in a company with dividend payout, chance of getting a return will be more. Okay friends, if you have any question put on the comment line. Go to the description of this video to read in this blog to understand more about these methods. Thanks for watching my video.